Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel and one of the most popular themes from you in the community, penny stock investing. Nation, there is no other investment like penny stocks to make you rich, and these companies are on fire this year. All you out there in the nation got in on shares of Veritone, ticker VERI, from our video October 7th when the shares were just $8.15 each. That's a 177% return in 2 months. Or shares of LNG Play Tellurium, ticker TELL, up 130% since late September. But you also know that man does not live by penny stocks alone. These are extremely high risk, high return investments, and if you're ever going to reach your goals, you need a complete portfolio strategy. That idea of building a portfolio is so important, in fact, that to get you started in 2021, I'm doing 3 videos highlighting the best stocks to buy in 3 themes: dividends, buy and hold, and penny stocks. You'll get immediate cash flow from those dividend stocks, that long-term return from your buy and hold stocks, and the potential for those moonshot returns from the penny stocks right here. In this video, I'll show you how I find penny stocks to buy, the actual process I developed as a venture capital analyst. I'll then share the penny stock investing strategy that will take the uncertainty out of trading and then reveal 5 penny stocks to buy right now. I'll be putting each video inside a playlist on the channel, the best stocks to buy for 2021, so make sure you check that out for the entire portfolio. Before we get started though, you know I gotta send one last shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Let's get to it. And you know, I want to get to those 5 penny stocks to buy. So let's dive right in. And in between these, I'm going to show you how to find these kinds of high return investments and reveal that penny stock investing strategy. Our first penny stock to watch is Veristem Oncology, ticker VSTM, $354 million biopharma developing medicines to improve the survivability and quality of life for cancer patients. And nation, from somebody that lost both his parents to cancer, this is scary and painful shit. Any drugs or treatment that help here are just invaluable. Now, of course, all biotech or biopharma plays are really just about 2 things: the company's pipeline of products and that cash survivability. Veristem has 5 registrations starting or well into phase 2 trials by the end of this year, and several others in that phase 1 stage. We should get significant results for these next year that could be strong drivers for the shares. A recent deal to sell Copiktra for $311 million gives this company a cash runway through at least 2024, so lots of time to hit that first blockbuster drug. The company has over $168 million in balance sheet cash after paying down debt, and its only major liability are notes due in 2048. Now, putting a price target on a biopharma stock is pretty much meaningless because you never know which drug is going to be developed and sold off. But this is a $354 million company with half that in cash and one drug alone that could fetch as much as $300 million. So these kinds of stocks can double fast. And so given these risks and that high level of uncertainty, one of my favorite tools for investing in these penny stocks like we'll talk about today is the stock simulator on Webull. The app gives you $1 million in a paper portfolio to trade or to follow your stock picks. It's a great feature to test out your ideas before investing your own money. I'll leave a link to the Webull app in the video description below. Check that out because not only are you going to get that stock simulator feature, but Webull is running a promotion right now to get 4 free shares of stock when you open an account and make your first deposit. It's free money, helps support this channel, and is an instant return, so check that out if you're not already using the app. Next up here is Synchronos Technologies, ticker SNCR, a $129 million provider of cloud and software-based activation solutions for the mobile users. And talk about an addressable market. This company is positioned as a leading cloud platform for mobile and ahead of what could be a boom in the 5G rollout. In fact, it brought on AT&T and TracFone as new customers last year, and 80% of revenue is from recurring customers. The company has 200 plus customers and more than 135 patents for a solid competitive advantage in that cloud and messaging. A cost-saving program this year helped it reduce operating costs by 17% and really drive that positive EBITDA growth even on slightly lower sales revenue. Now, I like this one at least back up to its 52-week high of $6.50 a share, which that alone would be a 121% return. But this is one that could run even further on that 5G ramp up. We've still got 3 more penny stocks to watch, but I want to take a minute to share what I'm looking for in a good penny stock investment. Those of you in the nation, you know I'm not just about to drop 5 stock picks in your lap. That does nothing for you, and I want you to be able to find these investments on your own and do your own analysis. So there's 4 keys that I'm looking for when searching for penny stocks to buy. These go back to my days as a venture capital analyst, to the process that I created to find these early stage companies with 10 and 20 times return potential. And first here is a management team that includes founders as well as some experience in finance and marketing. And this list of what to watch for is in no particular order, but a good management team is absolutely critical. In fact, I'd say at least half the startup investment deals that I passed up working for the venture capital clients were for weakness in the people leading the company. Next here, it's all about growth and how big the company can become. Here, I'm looking for companies with a giant addressable market and proven sales growth over the last few years. Now, generally, this means sales growth of at least 20% or more over the last couple of years, maybe with 2020 as the exception, but this is all easy enough to screen for when you're looking for those stocks to buy. For that addressable market, that's the size of the potential customer base and management's estimate for what kind of market share they think they can take in the future. And for a lot of that kind of information, you're going to find it in the company's financial reports or in the presentations on its investor relations page. For example, researching Fastly, I found it was estimating a $35 billion market for its two segments and a compelling case for taking market share that turned into a 200% return on the shares. And most of these early stage, these penny stock companies aren't going to be profitable yet, but you'll want to see that companies can grow their sales while keeping their costs under control, so you've at least got a pathway to that profitability. And this last factor here is going to take some research because you've got to find those companies with a competitive advantage. Because these companies aren't competing in an empty market. These startups are coming into industries with established players, and they need a compelling reason why their customers should switch. For example, with Zscaler, I saw a unique cloud-based security product that could take market share from those legacy providers that were still dependent on the hardware and the data centers. So it does take a little more time and some research, but learn this process. Nation, I love you, but don't just depend on some Yahoo that looks great in a bow tie to be picking your stocks for you. Next on our penny stock list, Fortress Biotech, ticker FBIO, a $255 million biotech with most of its established products in dermatology, but a strong pipeline of products across oncology, gene therapies, and rare diseases as well. The company already has 5 commercial products, which is extremely rare in a small biotech firm, but these are driving $43 million in annual sales while Fortress develops the rest of its pipeline. Revenue increased 17% over the last year, and its dermatology segment, that largest producer, is growing sales at a 29% pace over 2019. The company has 2 candidates in its phase 3 trials with potential revenue of $790 million from tramadol alone. Some other standouts here, a $175 million market on its CUTX candidate for Menkes disease, and 2 others with sales potential in the hundreds of millions. The pipeline is there, and the company has over $218 million in balance sheet cash. That's against just $55 million in debt, so plenty of cash survivability here for development. 2 more penny stocks to watch, but I want to talk about a penny stock investing strategy here because I feel like a lot of investors out there are just doing this all wrong. Now, you can make money trading penny stocks, buying in and selling after that 40 or 50% return, and this is how a lot of investors do it. They'll take that quick profit in just a few months rather than staying in the stock. And the problem here is they end up selling their winners way too fast and then holding on for dear life to the losers. They might get that 40% return on one stock, but then they hold on to a couple others that are just dead money for years until they realize that 30 or that 40% loss. And so then what ends up happening is your portfolio return, so that group of 5 or that 10 penny stocks only ends up producing maybe a 10 or a 15% return at best. Instead, I want you to think of your penny stocks as a venture capital investor would. You're buying into this company and you're going to hold on until that 5 or that 10x investment exit through an acquisition or an IPO. So this is going to mean holding all your penny stocks for at least 3 to 5 years, giving these small startup companies the time to grow and either be acquired by a new company or multiply sales for multiples higher. And yes, some of these penny stocks are going to be dogs. In fact, expect about 4 out of 10 of these to be complete losers. But it's the rest of these 3 to 5 stocks that are going to go on to 10 and 20 times your investment that are going to take your entire portfolio to a 20 or a 30% average return. That's the venture capital way. Fourth on our penny stocks to buy list is Elevate Credit, ticker ELVT, a $114 million online lender to non-prime borrowers in the United States and the UK. Now, I actually recommended Elevate back in July when it was trading about $1.73 a share, so that's up 75% already, but could still have a lot of room to run. The entire lending industry has been hit hard this year. Investors have been worried that those lower credit score borrowers would default, leaving these fintech companies just totally unprofitable. Against this negativity, management is cutting expenses and repurchasing shares. Loan growth is going to be weak this year, but is expected to rebound in the fourth quarter or early 2021, and this is one of those rare penny stocks that is actually already profitable. The business turned profitable in 2017 and booked triple-digit income growth in the last 2 years. Now, I like Elevate here back up to about $4 a share, and there's a good chance it gets there in the next year as things get back to normal. This next penny stock is going to surprise a lot of you. C-Spine Holdings, ticker SPNE, a $400 million medical devices company designing surgical solutions for treating spinal disorders. And the fact here that the shares are almost $15 each does not mean that this is not a penny stock. The company has a market cap of just $400 million, which still means it's very small. Nation, this is a common misconception of penny stocks, that they have to be under $5 a share or even under $1 a share. Penny stocks are any company with a market cap under about $500 million, a fast-growing company that's high risk and high return potential. Just an example here, and then I'll get back to C-Spine, but ADT Inc., ticker ADT, is a $6.5 billion company. That's 16 times the size of C-Spine Holdings, and yet the shares here trade for less than $8 each. Share price means nothing. It's just a function of the market cap and the number of shares available, so just get it out of your head right now when you're picking these penny stocks. The market for C-Spine spinal implants and orthobiologics is $7.1 billion in the US alone, and the company has grown revenue to $160 million a year. Sales grew by 11% last year, and the company has been improving its margins for that higher profitability. C-Spine is also developing new products for other end users and has a pristine balance sheet with $93 million in cash and no long-term debt. Click on the video to the right for the 5 best stocks to buy in 2021. 5 stocks with surprise breakout potential. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.